Eric Mother.com. As we continue here with our mentorship videos here, let's take a look at a situation. I discussed this yesterday, which was Sunday, today being Monday, January 25th, 2016. We can see here that we have a situation where EWV, which is a way to short Japan, on the weekly, if it can move above the recent weekly closing high of August, level there we can say is at 57. Get that off there, 57.29. That's the previous weekly closing high going back a couple of months, and so that is one way to look at this. Now you can see that it's been struggling over the last 2-3 weeks. Resistance here at about that level, went above it and closed lower, and here we are seeing another attempt. So it's not like it hasn't been trying, but it has been failing. Now the one thing you'll notice here is, in fact, let me go back to the monthly. So remember, first thing here that we are looking at is the monthly. That is always our default, and the monthly has a slightly lower entry level because the weekly entry level, which was the previous weekly closing high, is at 57.29. Here's another reason why I prefer monthly charts personally, and they make a lot of sense because the entry point here is this previous monthly closing high. The level there is 57.10. so instead of waiting for this 57.29, you get a chance to get in earlier at 57.10, and the monthly chart looks okay. Now one thing I'm going to stress here is, personally, I would rather breakouts above 50. Generally speaking, they tend to act a little bit better, because the problem here is if the stock stalls around here, it's gonna have its monthly RSI showing resistance here with a chance very easily of rolling back below 38.2 on its monthly chart, and I would rather just not own a stock trading around there. So I tend to prefer to ignore stocks that are not breaking out above 50. But there is a catch here, because if this thing is to do well, now that it is moving to fresh 3-year highs there, sometimes what could happen is you get a couple of let's call it catalysts. You get this breakout, okay, and then you get a move above 50 on the monthly, which can be a catalyst to the upside. If the stock has legs, it finally gets another catalyst when it moves, so 50, and then when it moves above 61.8, in theory you can have another catalyst jump as it moves above RSI 61.8, and if it even has further legs, at some point it might move above 69.1, which is another catalyst. So the upside is, if there is truly legs in the name, you get a chance to own it while it is moving above this acceleration points. So that's the other argument. But generally speaking, you'd rather have a stock that is already trading above 50, because it tends to have more momentum, has proved itself. But the catch is, if you can own it and if it's to do well, you might be in the name well before it moves above the 50, 61.8 and 69.1. Of course, here, as we always make sure, any stock we are watching should have the MACDs moving to fresh 3-year highs, and of course this one is not disappointing. We also see that we could get a chance of a nice move if the monthly can move above 0 on the secondary MACD setting, something it hasn't done for a couple of years. Now I'm going to go to the weekly, but before I do that, I want to take a look at a long-term monthly view, because there's a slight problem with this chart, and I'll show you the weekly chart. Couple of observations. Number one, you can see that there's an argument here that there was a recent break in 2012 which brought the stock lower, or the ETF, and so if we draw a line somewhere around there, you can see that the RSI is coming back to test the previous breakpoint. So you can't be overly aggressive here, because this is strong resistance. So it needs to clear that red line before it can move higher. The only reason why I actually bring this to your attention is because in an ideal market situation, and I mean ideal, it can move. It hasn't done anything at all since 2008, and so this is not one that you want to put on your portfolio and watch for months and months. It's either moving or it's not. The last time it was moving, it jumped from a breakout perspective during this period here, jumping from about 270 all the way to 650 in about 4 or 5 months. So the key here is it's either gonna work out or it's not. One of the reasons why I don't like it necessarily is because on the weekly we don't have what I call a beautiful looking chart. It's very ugly. You got this movement. This is not what you want to own ever, because it's just gonna frustrate you. And now here it's all over the place. That's one reason. If you take a look at a 5-year weekly, there's another reason why this might not work, and it's a very simple line. Stock is trading at 61.29 on its weekly RSI. So, and you can see that if you draw a line somewhere around there, which happens to be at about 61.8, this is where the stock has been struggling. It's not my opinion, it's a fact. Double top resistance here for the highs there. It tried to move again here, was hit back. That was the high. Uniform activity above the red line, back below it for the highs there. Came close to this double top here for the highs here. Resistance here for those highs. Resistance here for the highs there, and now back here. So clearly it needs to clear the red line. If it cannot clear the red line, then it's gonna fail. And pretty much what I think here is the best way of looking at it is, if you are looking to short Japan, and after looking at this chart, which is not the most encouraging based on the weekly chart performance and where the monthly chart RSI resistance might be, if you are gonna buy 100 shares just because of the way the chart looks, maybe you might trim it back and buy 80 shares or 75 shares, something like that, just because you're not as excited about the possibility. Of course, we need to stress this. Maybe this is a different opportunity, because if it can clear the red space or the red resistance line at about 61.8, if it can clear that resistance, then maybe for the first time since 2008, it might have a chance of moving higher. But we don't know that. So we have to be very careful, and at the very least, we gotta make sure that we have our stop in place at about 5% or so. So yes, it's a way to play Japan. And so maybe what we can do, let me take a look at NIKK. Let's take a look at the Japanese market itself, and I just want to take a look at the monthly, and the monthly is still showing a move below the recent monthly closing low of 05, or not 05 but 2015. Still breaking that, still trading to fresh 3-year lows. RSI below 50 this month of January 2015, and we are looking at the MACDs already showing a sell signal. So on a broader scale, we can see that the main market there continues to give a sell signal, so we can play that. Let's take a look at the daily, and the daily had come back with a 5% move on Friday, but was coming back to test this, as I pointed out during the weekend world market analysis video, that we are coming back to test that line there. So if it's gonna move, let it move, but make sure you have a stop, just because the weekly chart is not very encouraging. And EWZ's monthly chart, as we mentioned, let's go back to that monthly chart. EWV. All right, go back to the monthly and go back. Let's go back about maybe 8 years, maybe more. Let's go back a little bit further than that. Let's go back about 10 years on the monthly. And what we're gonna do here is just find out where it had a break, and you just follow the lines like that. So we know that was a break there. We haven't been back to those levels since, and the risk here is that we are coming back to test that level. So if you see this thing stalling, that stall is going to be legit. Otherwise, for this to move higher, we definitely must demand that it continues moving higher, potentially above 50 on its monthly RSI. At some point, you'd like to see it move above 61.8 for the first time in many years, and at some point also, if it can have a blast above 69.1, that's when you're really going to see the spike. So risky trade. If you're going to buy 100 shares, again, you don't have to buy 100. Why? Because we've looked at the charts on the weeklies, the monthly. We're not sure that this is a good buy, so we have to kind of not be too sure. And again, make sure that we have stops in place. Eric Mwadid, Mwadid.com. As always, good luck, peace, and blessings. I am out. Woo!